Okay, folks, welcome to the best stock charts for September. What we're going to do is we're going to kick things off today with a follow-up to my Swing Trading Today video, which I put out on August the 22nd. I subtitled it Web 2.0, Slicing Their Own Throats. We'll talk a bit about that. Then we'll segue into the watch stocks that we're looking at for the new trading week. But before we get to the commentary and the charts, I would ask you to pause and do me a favor, if you would, follow me on YouTube, subscribe to the YouTube channel, clicking that bell button. You get notified of future videos. If you watch this on the website, enter your email address on the website. We hate spam too. You will not be spammed, and you'll be sure to catch all of my free commentary. And of course, if you'd like to become a member, we have a 14-day free trial offer. Cancel at any time. So let's get to it. The commentary that I spoke about earlier was related to the fact that the large social media companies, and I'll include Google because of YouTube as a social media stock, not to mention their search business, and I warned of their very public, very brazen approach to censoring conservatives, a very, very hypocritical policy they have on, for the most part, all of them. And then the audacity of all of these media companies, social media companies, to get together at the headquarters of Twitter and for the most part collude to decide how they're going to manage the conservative voice. Now, here's a quick clip of what I had to say so you can get a feel for how the commentary was going on the 21st of August. I'll link to it at the end of this video, so stick around for this video. You can always segue into the commentary at the end of this video. I will link to it. Here's what I had to say. To the next article. Facebook bans activist mommy Elizabeth Johnston, I never heard of this lady, as the purge of conservative accelerates. Now, I was going to ignore this until I saw that she has 600,000 followers. Think about that. Now, this comes on the heels of the Alex Jones banning only a couple of weeks ago. I've said it in the past, and I'll say it again. These companies, Facebook, Google, Twitter, are slicing their own throats. And all you need to do is take a look at the chart. Okay, so fast forward to August the 30th. Trump says Google, Facebook in very antitrust situation. As a company with a dominant business, the last thing you want to hear is antitrust. During the 60s, 70s, and even into the 80s, AT&T was a monopoly which was broken up. And while the name AT&T is still around, they actually went out of business. The name was bought out, and whatever company bought them renamed their company AT&T for the brand awareness. So that's what happens when the Department of Justice gets in your business. And we all saw what happened to Microsoft back in the late 90s when the DOJ got into their business. You don't want it. And now you have the President of the United States who is now tweeting almost on a weekly basis about the power of these social media names. That is simply not good for business. And as a potential shareholder looking for opportunity in these names, I see nothing but risk rising. Because it could be any day that you wake up and you have the headlines glaring that Jeff Sessions has just filed suit against Facebook and Google for antitrust violations. You don't want to hear that as an investor. It is a nightmare. You'll see these stocks gap straight down. And when you take a look at the charts, we'll begin with Twitter. It's rallied since my commentary, but it looks as though that rally is beginning to peter out. You saw topping tails last week on top of this candlestick, and it looks as though that we are going to pull back. This is a very weak stock. This is a dead cat bounce. What I'd be looking for here is to possibly short Twitter. Here, take a look. We've been putting in lower highs. We peaked out at 47.79, lower high at 46.90, confirmed breakdown below the $42 mark. We dropped like a rock. We've rallied back, topping action. We may pop up to a new weekly high next week. I'm questioning whether or not we're going to be able to rally up and through this upper band of resistance. Now, Stokes, you may be saying, Bob, the RSI is hooking up now and the Stokes are hooking up. I don't think that this is going to last. Traditionally, it is not the norm that you get a brief retest of oversold levels on Stokes below the 20 level and you shoot back up. Yes, it happened back here, but it's certainly not the norm to get it. Note how you had a double bottom set up here, here, an extended period here, rounding tops. I think we're going to roll over on Twitter. Could be wrong. Volume very light. Now, when you take a look at Google on a daily basis, we are very, very weak here. We broke down to a new weekly low. We also broke support. We have lower highs. And if we break down below 1204 on Google, that is a confirmed breakdown on the stock. These stocks are not looking good, and they should be looking better. And you may be saying, you know, the stocks are trading higher than when you talked about them on the 22nd. Valid point. But how are they looking relative to the overall index? Here's the Nasdaq overlaid in blue at new all-time highs. Google lagging. Let's take a look at Twitter. Lagging by an extremely wide margin relative to the Nasdaq. Facebook, absolutely horrible. A dominant market player underperforming the Nasdaq by an extremely wide margin. Any fund manager out there worth his salt who understands what the damage that can be done to the share price once a DOJ antitrust lawsuit becomes public, he should be lightening up on these shares, and I think that's exactly what is happening right now. Now, on a weekly chart of Facebook, horrible, absolutely horrible. We attempted a rally last week. We closed up a little over half percentage point, but we couldn't close above the 50-period moving average. We closed well off the highs of the week. I'm looking at Facebook as a potential short here. In fact, Google as well, since it's breaking down. Twitter, also a potential short. So members, we'll be talking about the social media names as potential shorts tomorrow on the week ahead commentary, as well as discussing the health of the overall markets. Where do I believe that the markets are headed in the coming week? We'll talk about the monthly charts now. Remember, August is now in the books. And we'll be talking about the monthly charts and how healthy this market closed out the month of August. And how do we appear poised moving into the back half of the year? Let's talk about another name we're looking to short, Netflix. I've been waiting for this one to rally, and it finally did. I think we could possibly move higher here, but I think it's safe to short it. The high of the week last week was 376. We closed well off the high by about $10 off the highs of the week. Now, the stop, the logical stop, would be on a close above this upper band of resistance, which, as luck would have it, was the high of the week last week. So if we put in a new weekly high early next week, we avoid the short. But if we fail to put in a new weekly high and we break down to a new weekly low, we look to short the shares, and we use a stop loss right above the highs of last week. Members, we'll talk strategy a little bit more tomorrow on the week ahead commentary. Let's talk about stocks that we're looking to buy. Advanced Auto Parts, a nice chart here. Tight pennant formation. We began to break out. In fact, we did break out on Friday. I will warn RSI making lower highs and lower lows. It could be because of the consolidation, so I'm not going to worry about it all too much. Stokes are rising. For whatever reason, Stoke RSI is breaking down here. That's a concern. Volume was good on Friday. No breakout yet on Ultimate Oscillator, but loving this setup here. Nice double bottom setup, higher lows. I think we're going to break out further on these shares. Members, more to come tomorrow. CVLT, I spoke about Commvault last week. This is a daily chart, and we did in fact break out last week. We've been consolidating. I think we're ready to pull the trigger here to the long side. Members, we'll talk tomorrow about what I'll be looking for in order for us to execute the trade tomorrow on the week ahead commentary, but Commvault looking very interesting. Dunkin' Brands daily chart broke out on Friday. Great stuff. RSI hooking up, broken out. Stokes rising, higher lows, all good stuff. Exactly what you want to see. Double bottom setup on Ultimate Oscillator. It is broken out. MACD rising. Volume, though, a bit light. So Dunkin' Brands looking good. Again, members, tomorrow we'll talk about strategy with regard to Dunkin' Brands and when we would enter the trade. MasterCard, daily chart in a very tight consolidation here. RSI looking good. No breakout, though. Volume, good. Stokes appear poised to hook up. So MasterCard looking good. We'll talk stop loss points. We'll talk breakout points tomorrow on the week ahead commentary. Monster Beverage. We're going to talk a little bit more than just simply the daily charts here. I want to talk about the weekly charts as well, because we broke out the week of the 13th. We had a breakout point failure the following week, and last week we recaptured support. So a very fluid situation here. We did close above support, which is bullish. But what has me a bit concerned is the daily chart. The RSI looks good. We're above the 50 level. That's good. No breakout yet. What's concerning are the Stokes. We're losing momentum. We're down below 50. And as I always like to say, rallies tend to fade when you have Stokes down below the 50 level. Now, on Friday, we did put in a new daily low and, in fact, a new weekly low. And, in fact, retested the lows of the week. Yet we managed to rally and close positive on the day with a bullish key reversal. Ultimate oscillator, lower highs and lower lows. We need to see a breakout here. Volume was good on Friday. It was a very good day for volume. So Monster is an interesting stock on a weekly basis. I have my cause for concern on a daily basis. And this is the value of using multi-period charts. So members, we'll talk about using the intraday charts as a tool for getting long of Monster, and we'll focus on the 2-hour chart. I'll focus on that tomorrow on the week ahead commentary. And if you're not currently a member, you don't want the trade alerts, that's fine. You can purchase the week ahead commentary and get access to the forum separately at a very, very cheap price. So take advantage of the 14-day free trial offer. Steve Madden shoes. We've spoken about Steve Madden quite a bit. We traded it. We booked profits in it. Now we're looking to get back involved. Weekly chart. Indicators are still rising here, but our Stokes are beginning to flatten out. We had a very volatile week last week. We sold off and made new weekly lows. Perhaps they were blowing out stops, taking out the week longs, light volume to the downside, which is good. Now, when you take a look at the daily chart, we managed to recapture a breakout point, a resistance level. So tomorrow we'll talk about strategy on the week ahead commentary with members about as to when the risk versus reward is best for getting long of Steve Madden. Ulta Beauty weekly chart. The weekly chart is all I need to talk about. It's because last week we had a very strong week. We recaptured the declining upper band of resistance and close there, more importantly. However, the problem is that we couldn't close at the highs of the week and above this resistance level, which has acted as very, very stiff resistance in the past. So, are we ready to buy yet? Possibly. But we're going to use a strict rule, and I'll talk about it with members tomorrow. I do want to point out that RSI did in fact break out last week. That's an indicator leading price performance. That's one of the reasons why I'm talking about it today. Great volume last week, institutional distribution, but you did have some sellers in there, right? We sold off from a high of 268.88 down to 260. So somebody wanted their money back, and it wasn't mom and pop selling 100 shares. So Ulta looking good. And that is it for this weekend, folks. Again, if you're not currently a member, sign up for the 14-day free trial offer. If you're not ready yet, fine, cool. I put out a lot of free content as well, so smash that like button. If you're watching this on Facebook, YouTube, wherever they have a like button, you know the deal. Follow me on YouTube, enter your email address. If you watch this on the website, get a couple of free trade tutorials, and never miss some free commentary. And everybody enjoy your Labor Day weekend and have a profitable trading week next week. Be well.